So welcome to our weekly watch list video for the week commencing the 17th of February 2025. As always, if you could please leave a thumbs up, like, subscribe, don't miss out on the future videos. Our watch list is exactly what you see here, and this is what we're going to run through. It's US President's Day today, so we're not expecting much in the markets at all, especially from obviously USD-based pairs. So any indices, stock indices, US30, US100, gold, GU, EU, anything like that. So we're just kind of sitting on our hands, really waiting for opportunity. Now, we didn't post this yesterday, obviously, because yesterday, Sunday evening, and then obviously Monday is going to be quite quiet today. So we thought we would use today to post our watch list. Now, we're going to start with the dollar index. And again, if we just look at our economic calendar, we've obviously got RBA tomorrow, and then we've got CAD CPI inflation, and then some labour, kind of employment figures for the pound tomorrow. So, tomorrow we obviously spike up again, and then inflation year on year, and then housing permits, FOMC minutes and bits and pieces again, more labour for the Aussie, and then labour figures for USD coming into retail sales to kind of end the week, which we'll obviously update as we go through the week. Now, last week, again, we didn't really share much on the Friday because we were looking to break our zones. In fact, Thursday and then Friday, there wasn't really any point in us marking things for the sake of marking things. Now, whilst we've got this set up, we're obviously taking today with a bit of a pinch of salt. Our next trading zone is going to be around this kind of red tangent box here, and we're going to get rid of these boxes now as well. So if we scale out, you can start to see the picture now, right? So this next red zone is going to be our support zone, 106, or as close to 106 as possible. We could even be inclined to use, that previous low here as the double bottom price, which then probably, ties in nicely with 106. So that's what we're going to wait for now, okay? And similarly, we've got US30, we've got a couple of zones marked on, we've got 45k, and then we've got this interim zone here of 44,450. Now, that 45k has held really well for, the last couple of weeks, and we've actually caught multiple opportunities. So this is going back to December. You can see 45k. What do we say? Every 5,000, so 45,000. We're going to have 50,000, we're going to have 35,000. These are huge psychological prices, right? And now 44, 43, 42, they're big whole numbers as well. So we use those as confluence. Now, we've obviously caught quite a few, nice moves. This move here was when, we were selling off on the Friday. And then you can see here we had a big market gap and continuation to the downside. That comprised of, Trump's tariffs, imposing more tariffs, sanctions and regulations to do with importing and exporting trade. And that's why we saw that USD really take off and, stock indices sell off. Now, we then recovered and then came back into 45k and then back down. So the kind of method is simply, we're looking to sell from this 45k price. We're looking to target maybe 43.7. Similarly, we're looking to do something with NASDAQ. NASDAQ, however, has actually broken a bit higher. So that throws a bit of a spanner in the works. We're not actually going to waste too much time on that, purely for the fact that, it's President's Day. We've got holidays. We are looking to break. This could be like a bit of a fake out. It could be, a bit of a manipulation, let's say. And then we obviously move on to gold. Now, gold, again, we've got that all-time high target, and we saw a really nice opportunity last week. And then we came into that zone, and then we bounced, and we targeted that all-time high price. So those that are in our free group, our Telegram group, in our members group, even following us on socials, we often share gold on our socials because we know everyone likes to follow it and trade it. Now, we've got a range here between $28, $70 per ounce, and then we've also got the highs, which is $29.35 an ounce, which is about $650 move, right? So, or $65 move, pardon me. Now, obviously, we want to sell from this top end and we want to buy from this bottom end. We want to continue that theme until it breaks. The classic saying goes, do not fix it unless it's broken. Which leads us on to FX. We've got GBP, Japanese yen, a very similar approach. Now, we've got support of 190 and resistance of 193, 300-point range with 45-point stops and then around 49-point stops. So we're offering around 6 to 6.5R, 6.5 to 7R, which is massive. It's really, really big. Now, if we looked at 193 here, we sold off within literally a couple of days, from here Tuesday, and then we're down pretty much Wednesday, Thursday, Wednesday. So, within 24 hours, we're down. Similarly, if we bounce from here, we're up within that same trading day. And, there's a lot of kind of yielding opportunity to be seen here. So 193 resistance, 190 support. We're going to look at GBP USD. We've got 126. We were following 125 last week. That broke. That exploded higher. So we're looking for 126, see if that can hold as resistance. Again, President's Day, we're not too fussed about what's going on today. We've kind of traded small positions on our funded accounts just to get those trading days done, and moving, a little bit closer to that payout. But again, similarly here, you've got Euro USD. Apologies, this is really blown up and it probably looks quite crazy. Now, yeah, simply put, we've got our confluence zone 105. 105 being our psychological price. Remember, every 500 points, 105, 110, 115, 120. And then we've got things in between. So here, for example, we've got 104, 103, 102, and so on and so forth. So 105 is good for us. We would much prefer to take 105 shorts as opposed to 126, and we'd only take one of the two. So the way we trade is, we look to follow a bunch of pairs that have similar confluence, and we take the opportunity that offers, one, the minimal risk and the least drawdown, but two, the best opportunity and entry point, right? So, if we've got a better confluence stack on fiber, Euro USD, we're going to want to take that as opposed to cable, okay? Because it just makes logical sense. Often we'll all see as well, we'll see maybe the Euro USD move in a quicker succession compared to GBP USD, and that might break a zone or start to unfold first, and then we think, right, actually, Euro USD's already moved as we've expected. Maybe cable's going to follow suit, so we pay close attention to cable because we've missed the opportunity on that reversal on fiber, and then we can obviously look to sell. For example, if GBP USD started breaking already and we missed that, we could look at Euro USD. Oh great, we're actually still on the zone, let's sell now. So you're just optimizing opportunity. And then Bitcoin and Ethereum, we'll dig into this very quickly. I mean, very, very sideways. We're moving from left to right, and we're not really trending any, of any nature. 96k, and then we've got about 98,500-ish. So, $2,500. Not really too interesting. We're trading south of 99k, south of 100k. That's important to us, but not really entertaining at all. And then we've got Ethereum. So again, just a bit of an interim zone, an interim play here. We've got 2750, 2760. Again, a bit of a 4-hour supply for around a couple of $100 maybe. A couple of $100. And again, we've got that range there from 25, let's say 2560 up to kind of 2760. As well. So, if we were just trading this range, there's certainly a 3-hour opportunity to just really tie in with, what we've got here, which is obviously what you can see, resistance support, and so on and so forth. So I hope you enjoyed this video. We will obviously be providing updates in our members group in our free channel, so check out the description below and get sight of that. If you've got any questions, queries, comments, leave them in the comments section below, and I hope you all have a blessed trading week ahead.